Anyway, it's great to see you. And we did a video not very long ago, which took us through a sort of 13-week cash flow and how to go about putting one together, which I found hugely useful having my own business and just seeing how you practically do that. And you took us through how to actually do it ourselves. And if people still want to see this, it's still available on YouTube or on Chip's social media accounts. So, and it helps you plan ahead so you don't get any unwelcome surprises. So you don't get that tax bill that you weren't quite expecting because you'd forgotten that that was coming at the end of July or whatever. So, and you've got the cash in the bank and you know it's there and you can cover it. But as part of that, we talked about the sort of the two key problems that businesses actually face. And I know that I've certainly experienced them and many of the sort of business colleagues that I have as well. One's not receiving money from clients quickly enough, basically getting paid, which is always nice. And secondly, you've got a load of outgoing expenses, but you don't actually have the cash in your bank account to cover them. And so you end up like hoping the money's going to come in, but you've got to pay the bill here. So you end up borrowing to cover those gaps, and then you're into interest payments, which you then don't pay off, and it starts to build, and you get yourself into quite a cycle. And I've seen that happen over the years that I've been in business. So why, Chip? Why is it so hard to get clients to pay when you've done the work? And why do they put it off so long, even when you give them periods of time to pay in? I mean, I was talking to another business colleague who's also a client last week, and it was literally like a therapy session where we were going through exactly the same issues that we were both facing.
So, number of things. I'm going to start off with, getting clients to pay, that was where you started. Firstly, they may have their own cash flow issues, right?
Yeah,
Are they managing cash? The thing about the 13-week cash flow tool that we talked about is, the first thing is you actually have to do it. And then when you do it and then you true it up it for 13 weeks, you find out if you really have any idea what's happening in your business or not. Because sometimes you don't, right? Sometimes you're
yeah,
like, wow, I learned a lot just by doing the exercise,
yeah.
which allows each progressive 13-week cash flow to be better. But if your clients aren't doing it, they by themselves may
Mm.
have the same types of issues that we're talking about. But I'm going to start off before that with what I'm going to call corporate stewardship. And so when you have a
Right,
company, you need to be a good corporate steward with your customers or clients. You need to have, a written contract or engagement letter that includes how you're going to bill them,
right,
how often you're going to bill them, and what they're going to pay and when they're going to pay. So often, we find, especially small firms, professional firms, where they bill haphazardly. Some of them are really good at the end of the month or the 15th of the month, but some of them get busy like every other month. Or, I've even found I found multiple actual professional firms who occasionally bill annually. Now they have enough cash flow that they're
really.
they're fine, but yeah, they bill annually because it's just such a pain
That's
that
giving me a heart
they
attack
just
just
wait.
thinking about it, Chip.
I know it's and it's just it's bad for everybody, right? Because by that point in
Yeah,
time, the clients have not they've often forgotten
forgotten
what you
about it.
did or the value that you did and all these sorts of things. So that corporate
Mm.
stewardship, right? Making sure your client knows how often you're going to bill and actually doing it. So it's every 30 days, be like
Yeah.
clockwork.
And you'd actually put all the terms and conditions in the contract, because often we will put what the overall package is that they're paying
Yeah.
for, but we don't put the terms and conditions in there. That comes in almost in the invoice itself, saying this needs to be paid in 30 days or 15, as we say, or whatever.
Yeah. And the problem with that is that it may be a surprise to them, right? What you
Mm.
put in the invoice may not be what they were expecting. And now you've done the work, you've sent the invoice, and you've asked them to do something which they didn't agree to. So again, that good corporate stewardship is upfront saying, listen, we're going to bill you every week, every 30 days, every fortnight, whatever it's going to be. And we'd like you to pay within X days, 14 days, 30 days. You agree to pay within a certain amount of days. That way, they know what to expect, and you have something that you can expect and you can hold them accountable to. So to start with, it's just that corporate stewardship, right? It's that.
Yeah.
And then there's probably a little bit of client management, which is okay, if we say we're going to invoice you every 30 days and you're committing to pay within 30 days of being invoiced, probably some ticklers, right? So probably um, something that goes out once a week saying just a reminder, your bill's due in 21 days. Here are 5 easy ways to pay. 14 days, just a
Yeah,
reminder, your bill's due in 14 days, and again, you can figure
yeah,
out for your industry, whether it's once a week, once every other
yeah.
week, a 10-day warning, whatever it is, but something that tickles them along the way, because some of our clients, they're very, very good administrative people.
Mm.
Others have offices that look like a bomb went off in them. And so, where is your invoice in that landing pad of
Oh,
the
yeah.
debris? And
Or
so,
the email box, your inbox. That's the thing.
or
It's
the
email these
yeah,
days. You lose
it
them.
can be, yeah,
Mm.
it sure can. And so that maybe that takes me to the last part of the good corporate stewardship, and that is make it easy for your clients to pay. And it's different than it used to be even 3 or 4 years ago. So many things were still paid by checks.
Yeah,
We still
that's
paid
true.
cash for our Starbucks. Now everyone wants contactless payments.
Mm.
You got to have a card that taps, or it doesn't. You have a problem somewhere, and then you don't know if it's
Yeah.
really, is it a tap, is it a lay on the machine, is
You got to
what
find the bit to stick it in,
yeah,
not on the person.
what is
Yeah.
the thing? But you have all these payment options. You have
Mm.
wires, you have Venmo, you have PayPal, you have credit cards, Apple Pay. I got a $45,000 bill 3 weeks ago, and the top option on the electric thing was click here for Apple Pay.
That's unbelievable.
It was, and I don't know if that's Apple trying to market to people, trying to say, "Hey, we want you to use us," or if that's literally what their customer base is starting to find. But especially with small business, with our younger business owners, our younger business managers, they're using their
Mm.
point cards, their Amexes, their Chases, they're using their Apple Pays, they're using these
Yeah.
different methods, and if you want to get your cash as fast as possible, you've got to have the payment methods that your clients want to use and have at their fingertips. If you want me to pay by check, you have to hope that I'm looking at your invoice when I'm near my checkbook.
Yeah.
Because
No,
I don't
otherwise
carry it.
yeah, and it is that time aspect, isn't it? I mean, we're just starting to look at some. We've done sort
Yeah.
of go cardless and
Yeah.
that
Yep.
kind of electronic payment, which has been really good.
Yep.
But we want to have sort of more options. And actually, it's not that difficult to do, is it? I mean, I
No.
think we've been quite surprised because I do think as a small business owner, you think, oh, think about all the admin that's going to go into it. But actually, it's quite a quick thing to set up, isn't it?
I was in an open air market in Zimbabwe in 2019 with my wife, and there was many things there, but there was something that caught her eye, and they we had South African rands, we had Zambian cash, we didn't have any US dollars. That's what they wanted, but they took
Yeah.
Amex. So literally I had these three Zimbabwe guys who were like making a pyramid holding up the machine with an antenna trying to catch enough
Try to
single
get a
to swipe
connection.
my Amex. But they did. And if they hadn't done that, if they hadn't, I couldn't,
Yeah.
I didn't have the money the way they wanted it. But even in an open air market in Zimbabwe, they were able to take my American Express card. If there's a client
Excellent.
that wants to take American Express, none of us have any excuses why we can't take that.
No, and I think it's easy just to get into a rut and not even think about it or notice it.
Yep.
And just going back to the point about sending emails out on to your clients to remind them. I mean, these days everybody's got the software, haven't they, which will do that for you. Or
Yep.
if you
You bet.
haven't, it's really worth looking at, isn't it? Because
Yep.
we've just moved from one package to a slightly better package, and it's doing a lot more for us and helping with management
Yeah.
accounts now, as well as that
Yep.
reminder and the chasing for the invoices. So
And the reality is that when you go through your client base, you're going to know who pays
yeah,
well and who needs extra nudges. And those handful of people who may need extra nudges, maybe they need a personal text or a WhatsApp or a WeChat or a Snapchat, whatever communication method they use. But
yeah,
again, that's helping our clients help us. So that's kind of the first bucket of ways to help with clients. Another way to help accelerate clients is thinking about cash discounts.
yeah,
So, if and you may want to bake that into your engagement terms and conditions and engagement letter where you say, hey, we'll give you, a 2% discount if you pay within 10 days, or you pay the full freight at 30 days, or any number of things like that, which you can just make routine to accelerate your cash flow. If we go back to our old accounting classes, we recognize the why 2
yeah,
net 10 is more valuable than getting 100% in 30 days, that time value of money, which is just exasperated with these high interest rates. So you probably could give
Yes.
4% net 10 and be better off getting that cash 20 days earlier right now than having a line of credit and drawing against it or those sorts of things. But you can also use that as a tool if you get out and find yourself in some cash trouble. So you start looking at your 13-week cash flow statement, you realize that there's a couple of those weeks where you really need to get cash in earlier. One of the things that you could do with all your clients, or a handful of the big ones, or a handful of the ones that are your best clients, is offer them temporary accelerated discounts for early payments. Maybe you have a normal net 30 term,
Mhm.
but for your super best clients, you say, hey, we'll give you 5% off if you pay at 15 days or 10 days, which is a good deal for them if they've got the cash flow to do it, and it helps you out. Again, it's probably a break even for you with the time value of money and all that, or maybe it's even just a little bit of a cost. But if you're short the cash, it's a lot less of a problem than having payroll bounce or not being able to pay a tax bill on time.
Yeah, I mean, would you suggest people to actually build like a a bit in there to be able to do that into the initial quote, so so that you avoid that problem of then
Yeah.
not actually covering your costs if you're after cash?
So I'd say prospectively going forward, if you're doing your 13-week cash flow and
Mm.
you can see that you're going to need cash accelerated at different times of the 13 weeks, once you've been doing it for a year, you've maybe find some cyclical things where, people go on vacation in the summertime, so your cash flow slows down because the payable people aren't there or whatever. I think you can find out whether prospectively it makes sense to add some of those sorts of terms where you just always try to accelerate the cash flow.
Yeah.
Um, I think you also can give it a trial run and see if it impacts your customers. Some customers, that 2%, they'll jump over the moon for it.
Yeah,
Other customers,
can't be
they can't be
bothered.
bothered.
Yeah,
Yeah, and so you'll find that out as time goes on. And so I think that's a great thing to do prospectively. Again, I always like tying it up with those best clients, because it does help them feel like they're getting a discount. It
yeah,
just builds the relationships a little bit, and it helps you out. Now, if you do your 13-week cash flows, you don't need cash accelerated, then no worries. But I think in general, for most of us, you have that issue of the sooner we can get the clients to receive the invoice and pay and get the cash in our accounts,
yeah,
the
better.
better off we are. The best planning we do, the best 13-week cash flows that you have, does not make you immune to surprises.
Yeah, well, what was interesting when we looked at our sort of cash flow and how the money was coming in over the months, particularly with the delays in payment, was that we realised that all our contracts started at the same time of the month, because
Mm,
people would say, "Oh, we'll start from the beginning of August or the beginning of September."
yeah,
So
yeah.
we were literally sending all our invoices out together with the
Yep.
same payment terms. So we had this massive gap between money coming in. And actually, by starting it on the day that they sort of sign up, we've actually now spread those payments out through the
Yeah.
months. So you're right, it is looking at the trends, which you can only see when you do that cash flow forecasting, and
Yep.
then it really starts to come to light. So, I mean, do you think that the clients are really suffering from the same things? I mean, they must be, mustn't they? Like late payment. So it's almost like a chain reaction, isn't it? They get paid late, they pay you late. I mean, all those ideas you've just come up with are great, but if they don't have the cash in the bank,
Yeah.
how do we move that forward?
So that's where some client management comes in a little bit. And that's for having a relationship with your client where you're able to, in a non threatening way, say, Becca, I've noticed you've been paying a little bit late. We used to have some challenges with cash flow, and here's a few things that we did that were good ideas. I don't know if you ever want to talk about it, but if you do, happy to tell you what happened to us, happy to connect you with who helped us. Our clients and our customers have their own issues. Some of them are common to us. Everyone's dealing with inflation right now. Everything costs more than it used to. And no matter how fast you add surcharges, no matter how fast you try to do things, it's been hard to keep up with the increases in costs across the way. Everyone sees that in general inflation. We see it in wage inflation, where it's just hard to get people. Every time you have to get a new person, it costs a lot more than the last person, and then the last person finds out how much the new person's making, and now you have that whole cycle that we all deal with. It goes on over and over and over.
Yeah.
And so you have, just all those types of things. You have the cost of money, and then you have extraordinary events, right? You still have supply chain disruptions where, if your client's selling a widget and they can't get all the widget parts they need, they can't sell the widget, their cash flow is down. We're starting to see problems with banks. We saw that with SVB, where I think most businesses ended up okay out of that, but they certainly were disrupted for a couple of days. And those
Yeah.
couple of days disruptions have ripple effects through months. We're seeing insolvencies in the U.S. The Yellow Trucking Company, which is the third largest shipping company in the country, went bankrupt. Filed
Right.
bankruptcy yesterday. And so if you are someone who sells gas or truck parts or tires or
Big
outsources
stuff.
labor, you insure them. I mean, there's a huge amount of disruption that comes up from those sorts of things. And so
Yeah,
again, I
I
think
imagine.
being where you're being in close to your clients and knowing them also positions you to respond well. If you know one of your biggest customers, yellow's a big piece of their business, today
Mm.
might be a good day to say, hey, if you can pay us fast, we'll give you an 8% discount, because they may not have enough money to pay everybody. And so how do you incentivize them to pay you? And you may
Yeah,
take a
that's a
little bit of it,
really good point. Yeah, that is a
but you got
really
to be
good point.
but you
Yeah.
got to be close. You got to be close enough to them so you know what's going on in the world. You know
Mm.
if they're jammed up, and you can find a way to jump to the front of the line. Finding ways to help them is important. We had different real estate's a good example. We had landlords during COVID that were suffering because their tenants weren't paying them. And so we actually reached out to these landlords who are clients of ours and said, if you'd like us to, we're happy to put on a free session or a free seminar for your tenants about all of the COVID relief schemes that are out there they may not know
Oh, that's
about,
a great
and
idea. Yeah.
find ways where we could help our landlord clients out by helping their tenants with their cash flow, with finding more cash, with doing these sorts of things. And it was really well received, and ultimately it helped our client out, which helped us out. And
Yeah, I
so
can see that. That's a great idea. It's
yeah,
just a bit of lateral thinking, really, and see
you bet.
it's really seeing clients as almost part of the team rather than what I think often happens, which is a them and
Yeah.
us type relationship where the
Yep.
antagonism starts.
The
Yeah,
reality is, for all of us, we're only going to be successful if our clients are successful. And their clients may need to be successful for them to be successful. And
yes.
where we can add some value, and obviously I'm not going to go out there and redesign a new aerospace part, but I might be able to give some ideas on how
Mm.
our clients who do that can get closer to their clients, can help their clients pay faster. This the same sort of advice that we're talking about, just sharing these couple of podcasts, I think
Yeah.
are things that are easy things to do, which may help our clients and may help their clients just enough to make the difference. But ultimately, that's what we're talking about, right? It's how do we make it easy for them to get our bills, to pay our bills, and then how can we help them make sure they've got the cash to pay our bills? Because if any of those three things break down, the money slows down coming to us.
So, I mean, talking about the sort of outgoing side, because obviously we talked about
Yeah.
me
Yep.
getting paid. Let's talk about the outgoing side, because at the moment, as you've talked about, there's inflation, rising costs. I mean, it's and then you've got the home finances as well. If
Yeah.
it's your own
Yep.
business, you're looking at both. How, I mean, finding making those payments and trying to juggle everything at the moment, to sort fit round your cash flow and make sure that
Yep.
you're sort of trying to you can sometimes end up robbing Peter to pay Paul, can't you?
Yep.
I mean, I think
Yep.
lots of people will recognize that. So how what is the cause of all this? I mean, just to sort of really lay it out there, and what can we do to help ourselves? Do you have any suggestions to sort of make life a bit easier and a bit less stressful at the moment?
So the first answer to your question is the same stress as our clients and customers have. We have, right? Inflation is hammering all of us. Driving to the office costs more than it used to. Just is. Eating costs more than it used to. Nothing's really gone down in price. If you think about whether
Mm.
we're in a recession or not, worldwide or in a country, the measure is always GDP and all these economic things. I would ask a person to think about if their money goes as far as it did 2 years ago. If not, that's what I look at as a recession, right? And so
Yeah.
that's ultimately where we are now. Why doesn't money go as far? Inflation, interest rates are going up, everything is costing more, and our income are not keeping up with our outcomes
Mm,
ultimately. And so, when we talk about what businesses need to look at, first, again, you need that 13-week cash flow tool. You've got to figure out what your cash needs are. If you're going to be short for a particular week or a stretch of weeks, then there's a couple ways you manage it, right? One of them is trying to accelerate client payments. That was the
yeah.
first half of this podcast. The second thing is trying to manage your outgoing payments. What things can you push off, push back? Many of the people we have to pay are pretty good about working with us for a period of time. If you've got a landlord and you say, hey, things are tough, they don't want to lose you as a tenant right now. Commercial real estate is going
Oh
vacant
yeah.
all
Can
over the
imagine.
place. And you
Mm,
paying 15 days late or deferring a month's payment till the end of your lease, that is far preferable to you dipping and saying, hey,
yeah.
good luck trying to find somebody. So firstly, proactive conversations. There are some things you can just stretch normally. Now you also can ask for cash discounts, right? If you've got vendors that don't provide those sorts of terms, say, hey, can I get a discount if I pay by this date? Tell them that that's what's happening in your industry. You're having to give
Yeah.
cash discounts, and you're hoping to get one too. So I think you've got some of those sorts of things that go on. I think the other thing that your business model needs to look at is your pricing. Is your
Right.
pricing going up as fast as inflation? We know that, 2020 to now, if you just add up the years, you're talking close to 25, 30% inflation. Have your prices gone up that much during that period of time? If
And I,
they haven't,
mm,
you're getting paid less than you're paying out.
yeah. And
Yep.
that's actually quite a difficult thing in sort of service industries, I think. I think when you've producing something, you can see those material costs. So one of my clients was an exhibition company. We could see the changes in
Yep.
the materials. So it was a very easy case to say, well, we're buying this in, it's much more expensive now. We can show you that it's gone up 20%. If you're selling time or you as a skill, how do you go about putting those fees up without the concern of people dropping away and losing clients at a time when people are struggling?
So what we're seeing in the US is story after story about firms that are increasing prices 15 and 20% a year, just willing to let those who want to bottom feed to go find the cheapest option, let them go and spend your time with those folks who are willing to pay more. If you provide more value to them, they may actually use you more. So I mean, I think firstly being bold, right, and just being everyone knows there's no one who's living under a rock that doesn't know costs go up. It may be your time, but your cost to buy an egg has gone up. Your cost to buy milk has gone up. All of those sorts of things are there. Your college tuition for the girls, all those sorts of things continues to rise. There's no one who's not sensitive to that. And so, what I've seen is two approaches. I've seen just hey, our fees are going up. Yes, they're going up. Our costs are going up. Our fees are going up. Pick a number: 15%, 18%, 20%. You know your client base. You know whether they're just going to take it, or if you say 1%, they're going to negotiate with you. So you may as well say 25 to hope to end up at 15. The other thing that I've seen is surcharges. So, in some of the service industries, I have seen this concern about memorializing these price increases. And so what they do is they leave their fees or their charges or their rates as is, but they add on a quote, quote, temporary surcharge due to inflationary pressures. And maybe that's 5%, maybe it's 10%, something like that. And it's a little bit more well received at times because clients don't think it's permanent, or they don't know if it's permanent. There's a chance
Yeah.
it goes down. Where perhaps the world economy switches around. For me and my insolvency practice, we get gleeful with a worldwide recession, and all of a sudden prices go the other direction, and you can take those surcharges off. So there's a couple ways you can do it, but I think that you do have to be bold. You have to communicate with the clients. You need to think about the value that you add, and you need to really really not get lazy about that, but and not take it for granted. The world is changing so
Mm.
fast. no one knows how technology is going to impact their practices. Is artificial intelligence going to do something? Is it not going to do something? And I see it going both ways. You know, there was an early leap by number of professions to utilize Chat GPT, and now the hallucinogen rate has gotten a lot of them in trouble where the information's just not been good enough. So there's almost
Yeah.
a slamming on the brakes, saying, "Whoa, you know, this is going to get us in trouble," and it's going to have some yin and yang. But my point is that, you know, none of us can rest on our laurels. We have got to figure out what we do for our client that makes us worth them wanting to keep around versus the other people knocking on their doors, because there's none of us who don't have somebody else knocking on the door,
Yeah.
especially now with AI. I mean, my LinkedIn gets hit with requests from people who want to provide staffing, marketing, networking, business. I mean, you know, everything, you know, routinely. I get texts that I have to block every single day, and WeChats I have to
Yeah.
block every single day, from people soliciting. So they're out there. And if your clients are satisfied with the value that you're providing, if you're looking out for them, you're making it easy for them to deal with you, they'll be less vulnerable to those outside attacks. And so I think that's an underrated part of raising your fees is client
That's really
satisfaction.
interesting. That
Yep.
is really interesting. Yeah, that's a really good point. Um, do you, I mean, how do people go about it? I mean, you've said that they make those two, you have those two options, you know, do the
Yep.
surcharge. But do they, is it better to have that conversation one to one, or would you recommend letters, you know, and
So
put it in
I would do
writing?
a little bit of both. I think I would send a communication saying, you know, Becca, I'd like to have a conversation with you. Our charges are just, you know, our fees and costs are going through the roof. And, you know, we need to find a fair way to pass those on. I don't want to make you bear all the burden, but I think there's some fair way. So can we talk about it? So they have a chance to not be ambushed on the phone call, right? Again, that no surprise
Yes. Yeah,
thing.
no, that's good
Give
advice. Yeah.
give them a chance to think about it. And if you've got a good relationship and they're halfway fair people, they'll agree that costs are going up, and let's find a fair way to handle this thing. You know, what's always interesting is there's some industries where you're just so profitable, it doesn't matter, right? You just make
Yeah.
so much money that, you know, a little bit here or there doesn't seem to add up to anything. Others are so much on the margins that, you know, every
Yes.
0.1% matters. And so who your clients are, how well they're doing, that all plays into it. But I also say they remember these things. You know, I remember the 2007 and 8 recession. We had a lot of clients that struggled, and they came
Yeah.
to us for fee concessions. They came to us saying, can we either pay less or can we pay this over a lot longer period of time? And we worked really hard with them. And I would say 85+% of them are with us today, and they
Because of that.
remember how it was when things were tough and
Mm,
how we partnered with them when things were tough. We didn't just send them fee increases. We didn't just tell them no. And that's, you know, we're not in a recession. We're almost in the other direction right now, where inflationary pressures are maybe driving us from the economic standpoint towards an anti-recession in terms of costs and all these sorts of things. But it's
mm.
also hard times. And so our clients are going to remember us for how we interact with them in these times as well.
So, I mean, the thing that I've really taken out of this entire session is how important communication is.
Yeah.
In fact, because everything you've talked about all comes down to getting the agreement with other parties, to
Yeah.
making sure everyone's aware of what you're doing, and not putting your head in the sand,
Yep.
which is maybe the thing that most of us like to do. I think when it comes to this stuff.
It's easy. It's easy to do. We're all busy, and these administrative tasks aren't the fun part of our job. Calling our clients, hitting them up for money is not the fun part of our job. But we can make these choices, what I call again that good corporate stewardship,
Mm.
to do things right up front, have the right understandings, the right expectations, and that makes it all that much easier. And again, the easier you make it to be paid, the more automated. I didn't mention this, but you know, there's plenty of services where they can just sign up for automatic payments. You know, where they just put in their payment method of
Yeah.
choice, and the bill comes, and the date comes, and it just happens, and they don't have to think about it again.
Yes, and that I found quite helpful.
Yeah,
So
me too.
that's worked well. So no, that's great. Chip, is there anything you just want to finish off with for everybody? What your sort of main takeaway is from today?
The biggest thing I would say is that I think there's a couple of ways that I bifurcate what I'll call the maturity of businesses in these areas. The first way is, do they cash flow project or not? Because until you do use the 13-week tool or some other tool, and until you measure your success at predicting things and refine it and actually get good, the rest of the stuff, it's all good advice, but you don't really know if you need it
Mm,
or how urgent it is. The second group of folks is now those folks who, in fact, they do cash flow project, but they see a problem, they're a little paralyzed. They're
mm,
nervous. They don't know what to do with it. Maybe they're not bold. They've never had these conversations before. And the one thing I would say to that group of people is, be brave talking to your clients, remembering everybody else is talking to your clients right now. And if you're the only one not talking, the only voices they hear are your competitors.
yes.
So be with them. You know, your clients and customers have a certain amount of time per day. If you're taking up some of it, your competitors can't get it.
Yeah. Yeah. No, that's a great piece of advice. Really good. No, that's excellent, Chip. Thank you so much. That's been such a helpful session. So I'm just going to go and re-listen to it and do notes now.
Fantastic.
Go and do my homework.
Good,
Oh,
good.
that's brilliant. Well, you take care and thank you so much for your help, Chip. And if
Sounds good.
anybody wants to talk to you about anything in this, they can get you on LinkedIn or on the Raymond website. Is
They can.
that
Either
right?
way is just fine.
Yeah, that's brilliant. All right. Well, you take care,
Thanks,
Chip. See you
Becca.
again soon.
You bet. Thank you.